had to go plan B this morning. I don't know what's going on with the internet here at my home, but it is 7:30, so I pulled out the phone and we are going plan B. Let me know if you can hear me. Let me know that everything is good, and we will get into the daily financial news. So a lot going on, a lot of Fed speak, a lot of real estate data, a great story from the one and only Jason Pritchard that we will get to in a moment. But let's get into what the Fed is saying. We had Fed President Barkin speaking yesterday, giving us kind of his insight. Again, remember, when we are watching the Fed, certainly the next couple of weeks, we're trying to figure out who is a dove and who is a hawk. You want to know who is inclined to rate cut and who is inclined to stay on hold. So again, folks, thank you for being here. We had to go plan B, which means go back to my phone and the old daily financial news sign. Having a handheld mic here, so appreciate you giving me a little grace this morning because the internet's not working, so the whole setup doesn't work. But there you go. So back to Fed President Barkin, kind of highlighting that businesses that are exposed to tariffs must change and be agile. Also says that he expects growth in 2025, but is concerned about inflation pressures that won't give up. This is something that Barkin really danced around a couple of times in this interview, really highlighting that the U.S. is set up to have a good or decent year, but he is concerned about inflation. Consumer spending is held up in 2024. Labor market was strong. Consumers are trading down. Remember that switching cost? You go to Costco to buy steak, now you're buying chicken. And productivity was up. In 2025, he is saying that rates won't be coming down as fast as some would hope. Again, I think there is an ever-increasing possibility that there are no rate cuts for Q1 and Q2. More on that in a minute. Actually, we'll do it right now. Ellen Zentner, chief economist, Morgan Stanley, says that Jerome Powell at the last press briefing declared a hard pause. Hard pause, meaning, we are going to be on pause for the foreseeable future, and we'll let you know when we are ready to cut rates. She did say, Ellen said that if the labor market broke, that the Fed will be making significant cuts, but likely only in the second half of the year. Again, this is really what we're starting to see. What does this all mean? It frankly means that businesses, investors, home buyers need to get used to 7 and yes, dare I say 8% mortgage rates. Now, as home buyers, right, first-time home buyers, it really means that we are going to be on hold, on pause. We're going to have not very good transactions for the year, as I've said for quite a while now. But yes, it is going to be that year. But as investors, every day, every week, every month that goes by, the odds, if you do the work, of finding a motivated seller increase. That's just the era we are in. So again, the more work you do, the more consistency you do, the more likely you are to find a motivated seller. And trust me when I say finding a motivated seller is where it is at if you are looking to make a long-term play. What else we want to talk about? Let's talk about the housing data. Mike Simonson put out his end-of-the-year stats. Again, we have 635 active listings as we ended the year. Mike is saying if we see inventory growth in January, it will be a sign that buyers are truly pulling back. And you know that I believe that it's very simple. 7 bad, 6 good. Sometimes in life, it really is that simple. I believe buyers, generally speaking, will be on the sidelines at 7% plus, and they won't come back until it's something in the low 6s. We have, I think, 2 or 3 evidence over the last 2 years as rates have been volatile. We know what happened at 6.11 4 or 5 months ago, and now we know what's going to happen above 7. New listings, less than 20,000. But as you all know, New Year's Day was smack dab in the middle, really frankly, a difficult time. So again, it's just noise. It's a holiday week. We can just ignore that. 260,000 homes are pending. That is actually up 5% year on year, which actually shocked me. New contracts came in at a price of $377K, right? The median. That is up 2.3% year on year. And finally, days on market, aka wish pricing, motivated sellers. 78.7 days. That is up 20%. Folks, this is what we want to see. I've been telling you for years now. Watch days on market. Days on market are your signal. It's your signal to say, hey, if they've been on the market 79 days and they've had 0 price drops, in my opinion, very likely, not always, that is a non-motivated seller who has some wish pricing. Hey, I wish I get my price. If I don't, I'm staying put. However, if you're on the market 79 days and you've had price cuts, probably 2, maybe 3, big green light, motivated seller, time for disrespectful offer. Sometimes, folks, it is that simple. But you have to do your job. You have to have your buy box. You have to be tracking day in and day out. This is just the rules of the game. Let's congratulate 2 folks that joined our school community and are committed to doing the work. I want to thank Frank and Jonathan for joining the group. Please introduce yourself. Unlock all that free education at level 2 and level 3. You've got creative financing. You've got a 10-week boot camp. You got some hands-on material from Jason Pritchard and more. Talking about Jason Pritchard, let's tell you about how amazing this guy is. So again, Jason Pritchard's been on my channel a couple of times. Every time I introduce him, I say he is on my personal Mount Rushmore of real estate investors. Let me show you why. Jason Pritchard is a house flipper. He's a wholesaler. He's a real estate agent. He dominates the Central Valley. He stumbled across a land parcel of 78 acres in Bakersfield, California. Now, Jason probably has done a couple of transactions in Bakersfield, but very bread and butter, likely wholesale deals. But he stumbled across 78 acres of land that he was able to lock up in contract for $1,025,000. Let's just call it $1 million for easy math. 78 acres, $1 million. Now, around this 78-acre parcel, there is some home building. So it's in the path of progress. It is clear to see. However, this is just raw land. It's not entitled. It's not zoned. It doesn't have sewers. And it's just raw land that you drive by on the freeway. So Jason, again, has never done land development. But Jason sees this parcel and in his mind's eye can see 200 plus single family homes. Again, his vision, his ability to look into the future and see what is possible is second to none. And now you got to remember, $1 million, 78 acres, never done this before. How many of you would even attempt something like this? I will be honest with you. I talked to Olivia yesterday. She and I would never, and I mean capital letters, bold letters, underlined, italics, never attempt to do something like this. Jason looks at the situation, knows that he has a deal that he could get out of, worst case, with a small loss, right, if he isn't able to run this down. So he closes on the transaction, and he has to close quick. He doesn't do a contingency offer, anything like that. He's got to make a call. He makes a call. He buys it. In about 4 months, since July, so what's that? Actually, I guess it's 5 months. Since July, he spent about $40,000 on city fees, engineering, plot maps, all the like. He's gotten estimates of $9 to $10 million to complete what is called the site work and produced finished lots. Now, when you are looking to sell to home builders, again, this is data I don't have. I didn't know. I've learned from him. You can either issue what is called paper lots meaning they're approved by the city, but there's been no grading and no infrastructure, or you can sell finished lots. Now, Jason considered selling paper lots and declined because the profit wasn't very good. He now has just signed an LOI, a letter of intent, to sell all 243 finished lots for $26.1 million. This guy's a freaking machine. He's a genius. He knows he hasn't figured it all out, but he knows he only has to worry about the next step. He goes out and seeks support. He's working with an architecture firm in Bakersfield to run Point. But again, buys it for $1 million, spends $50,000, has bids for, let's call it $10 million, and he just inked a sale of finished lots for $26.1 million. But that's not all. No, that's not all. He was able to carve out 13 acres of the 78 to keep. He is going to the city to get that 13 acres zoned multifamily. He is looking to get about 30 units, I think he said, per acre. So I don't know what that is. That's a lot of that's like 390 units, I'm guessing. And his intention, look at this. This guy's a genius. He's going to take his profit from the sale of the land to the home builder, and he's going to roll that cash into building, let's just call it 400 units, and he's going to keep it. How do you like me now? Jason Pritchard, Mount Rushmore Investors. Folks, he is coming to the event in Las Vegas. He and I are communicating about doing a fireside chat kind of conversation on stage. And I think you guys are going to want to hear how he does this, how he processes that. And again, he's done things like this all the time. If you've ever been in the Bay Area, we have this place called Pebble Beach up the road. And in Pebble Beach, there's a super exclusive area called 17 Mile Drive. He's also decided, again, in an area he didn't have, to buy a flip in 17 Mile Drive. And he was ready to rock and roll on. And then he got an offer, and he took it, and he made 7 figures to sell it as is. So again, the guy is a machine. So we did get some data on our first of 3 numbers on the jobs market. The JOLTS report came in today, and it came in much better than expected. It was expected to be 7.73 million. Actually came in at 8.09 million, so that's a beat of 300,000. This is actually interesting because Taylor from Life Goal Investments and I, during our conversation, I actually put out there that I thought the JOLTS report would be better because small businesses have had a change of heart. And I actually remember asking him, what do you think? Will that happen? Well, now we have the answer. It certainly did happen. Remember, tomorrow is ADP and then the Bureau of Economic Labor and Statistics on Friday, which will be interesting. We obviously had another accountability group just highlighting preparing for taxes as a new landlord, what data, what information you need. We talked cost segregation, bonus depreciation, and so much more. As for the event in Vegas, we sold another 5 tickets yesterday. We have only 76 tickets left. 12 of those are VIP. VIP is almost gone. So if you're planning to come, make sure you get your tickets soon because I think this will sell out in the next week or so. Don't miss out. Again, my events, my celebrations are different. You get to ask questions. You drive the conversation. You get to, network with all of them. No selling from stage. Come check us out. We are a different thing. And it's Valentine's Day weekend. Come out Friday, celebrate Valentine's Day, get educated, make some friends Saturday, Sunday, and then fly home on Monday. What a better way to do it. All right, folks, thank you for sticking with me. This plan B, doing it from my phone, is not my goal. I got to go figure out what the heck is going on with the internet now because, of course, I have an 8 a.m. and a 9 a.m. and a 10 a.m. interview today. So this technology thing better freaking work. Take care. Have fun. Later.